Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Sunday, June the 26th. The year's 2022. Let's talk trading. It's time for the weekly open and gap. These videos are for educational purposes only. Your results may differ from mine. Well, we are entering the last week of the month of June. So let's just take a quick look at the month. And we can see we are in the lower wick zone of the previous month. And funny, we're right at the month's future pivot point. So next month's pivot point would be right here if we were to end the month right now. As you can see, we did take out the monthly pivot and we missed the pivot of last month. 1 month ago, we missed the pivot. We have, well, it looks like 3 gaps that haven't filled. There really wasn't much of a gap today. You can see we're 10 pips below the open, 21 off the close, and 19 above the, 21 off the high, and 19 above the low. We are a little past 7.5 hours into the trading day. We're putting in that opening range for the week. You can see we're below the opening range for the month. 323 pips below that monthly open. For the year, 1,249 pips below the yearly open and 344 off the yearly low. Inside bar action from 2 days ago, you can see we poked out of it by almost or a little over 2 pips. If you took that long, hopefully you either scratched that trade or took your 2 pips really quick. It's like we've got lots of inside bar action on the dailies and the weeklies and about a handful or so on the monthlies. Only 40 pip range at the moment. We've got 5 pairs over 100 pips, and I don't really see any correlation why these pairs are over 100 pips at the moment. Maybe there was some news. Right now we're 8.6 pips, 7.5 pips below the daily open. Looks like price wants to come back up. And looking at the buy zone, you can see here we've been crisscrossing that weekly open. We started off, and you really couldn't have traded this first hour. The spread was just crazy. But you can see here we poked above the weekly open on that cross, hit the buy zone, didn't really clear it by much. So if you took the weekly open cross here, you were rewarded. Then coming back the other way, just following the candle color here. Rats, range is too low. Even though I did see somebody said they like to trade the rat zone during this time, I really don't recommend it because you don't have enough range so you can take advantage of the price action. Meaning there's going to be a wick on either end of that daily candle, and it's usually going to be somewhere between 15 and 20 pips right now. So you can see here the green rat candle is about 13 pips off the low, where the smart rat candle and the smart rat red rat is about 19 pips off of the high. So you can see the difference in those wicks, and that's why I invented the smart rat. Because one of the things when you're taking statistical trades, And this is what a lot of traders fail to understand. You have to take all of the trades because you don't know which one's going to be a winner or a loser, as Mark Douglas he used to say that in his videos. So you might try and filter out the losers, but the thing is, you're not doing yourself any favors. Because if you found a method that's producing 60 to 70% winners, all you have to do is take every trade and manage the money, manage your risk. It takes all the guesswork, all the analysis, all that hard work. You don't have to do it anymore. You just have to take the trade, make sure you don't lose more than you're willing to lose, and then let the trade ride. And when you can, you take profit. I mean, it really can't get any simpler than that. I was reading somebody else's trading newsletter, and actually, it really wasn't about trading. It was more about systems, and they were just talking about how when you have a system, you just have to trust the system because you've already proven that it works. So you don't need to reevaluate it on each and every trade. You're really doing yourself a huge disservice. And just know you're going to have those losing streaks, you're going to have winning streaks, you're going to have flip flops where it's like every other trade, it's either a winner or a loser. But you have to look at trading in the long game. It's not one trade that makes or breaks you, it's that aggregate of trades. It's, 1,000 trades, 10,000 trades. I mean, how many trades do you take in a day, in a week, in a month? If you're a swing trader, you might only take a couple of trades. So maybe at the end of the year, you might be looking at maybe 2 dozen trades that you've taken. If you're a scalper like Walmart and I, we take 50 trades a day sometimes, just depending on the day and how much we want to trade. And let's see, looking at the pivot trading plan, Bambino flex indicators indicating a long, price near the pivot, bias is long. And it looks like we've already taken out the pivot here. So yes, on the daily, we've taken out the pivot. Weekly, we've taken out the pivot already. Monthly, we've taken out the pivot, but we still have that open pivot these open pivots from the past 3 months. Thinking by the end of the year, these will be gone, but you never know. Wick zone, in and out of the upper wick zone a couple of times. Price just doesn't like staying in the wick zone. Once again, a wick zone trade, simple horizontal line trades. The lines don't move. All you have to do is take the trade, manage the money. Take the trade, manage the money, manage your risk. There's nothing to reanalyze. There's nothing to say, oh, I shouldn't take the trade this time. No, you take it every time. And you will have some losers. But if you look here, if you took these shorts, actually, this is the one true short because you might not have wanted to trade it against the H1 candle color. But let's see if you trade it the 30-minute. There was the one. Let's see if any time frames would have given you a signal. 15. It looks like we go down to the 5, and the 5-minute would have given you 1, 2, 3 signals. And so as you can see, if you took these signals, there was a chance to take profit here. On this candle, there was a nice profit. On this candle, you see here another nice profit. So just depending on the time frame that you like to trade, chart period. But as I always like to say, price is the same on all time frames. It's just sometimes we want to look to see the momentum off of a candle, whether if it's already ranged out or not. Sometimes we don't even look at candle color. We look at price action. We can see here it's failing to make a higher high. So take the trade. It's failing to make a higher high. Take the trade. It's still failing to make a higher high. So you don't always have to use candle color. Once again, sometimes it's just pure price action. And speaking of price action right now, we've got a range of 40 pips. We haven't broken out of the previous week's high or the previous week's low so far. We can look to take those trades when the opportunity presents itself. Wall, mall, sweet spots, price action simple, trading with H1 candle color at the first line encountered. Notice we've got a couple of hours that were over 20, but once again, this time of day is not the time that we usually trade this method. It's really important on methods that you wait for the right time. A lot of people don't. And in fact, I even saw some video where it was funny. They were using MACD and RSI. I'm not really sure why they think they need two oscillators when, one is more than enough. But the squiggly line people, they have their own ways of trading. I used to be one of them, but I left that. Wow, it's been a long time, over a decade. But you have to find what works for you and execute it, and don't worry about what other people say. If it's working for you, that's all that matters. Okay, lower high, higher low using the 3-level ZZ. You see we had a nice signal here. You took that trade and stayed in it, you'd be up 9.9 pips at the moment. You can see here we're at a higher low trade. If you took that trade off the 3-ball, you were rewarded by about what, 12, 13, 14, maybe 15 pips there. And sometimes, if you can wait for those 3 balls to show up and then just take those trades, once again, they can be profitable. Now, in this particular case, I would imagine this might have been a 3-ball here, and you might have only gotten a few pips, and then once again, but if you look left, you can see where price has reversed before. And sometimes that's a clue. If it breaks it and comes back strong, you might want to jump in. If it comes back weak, you might want to just say no. But once again, whatever your method tells you to do, you have to do it. And if you're struggling, meaning you're not profitable, just trade one method. Just learn one method. Just use one method. I can't stress that enough. Method hopping will do nothing but kill you. Okay, accumulated range so far, 1815 pips. Oh, just looking at the monthly trade reminder here. Inside that lower wick zone, 321, not 320 pips below the open. And if you like the moving average, the EMA 5, we're 437 pips away from it. That's really far off. So, fellow traders, I'm wishing you a profitable week. Hope you had a fun and safe weekend. And if you have any questions, let me know and I will answer them. Somebody was asking about the donationals. Yes, you have to tell me which year you want if you don't want the current year. So, fellow traders, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.